Good morning, Mr. Winkelmann. In this environment of low interest rates, where do you see opportunities in Europe?
I mean, in general, when you think about investing for your pension or for your retirement, thinking now about fixed income investments for the long term doesn't seem to make too much sense. I mean, a lot of government bond debt is currently yielding negatively, so you need to think about shifting your investments back from the fixed income space into more riskier assets. I mean, the products that I stand for are European equity products, and I do see a lot of interest and a lot of value in investing with European equities also at this juncture, even if we have already seen quite a nice rally already in 2013 and 2014, and also the start of 2015 has been quite nice with an appreciation in stock prices by roughly 20%. That said, we are just seeing the turn also in sentiment dropping through to the earnings growth line of a lot of European companies. European earnings expectations are moving favorably to the upward direction, which gives you some more flesh on the bone, if you want, for future share price appreciation. So European equities as a standalone investment and also looking at a global perspective in a global equity universe seem to be quite an attractive choice these days.
What is your approach of investment? How do you select companies?
I mean, what me and my team and the Europe Equity Growth team at Allianz Global Investors are doing, we are not betting on any macro development. We are not betting on the ECB or what Draghi is doing next day or what the Fed is doing. Our approach is simply to focus on the single stocks. We call ourselves stock pickers, meaning that we dig deep and drill deep into the investment cases of single companies and decide upon some critical features like what is the return profile, what is the cash flow profile of a company, how high are the barriers to entry for this business. In other words, how forecastable are future earnings and cash flow streams for a company. So looking at the single stocks and making your mind up about do you want to get invested with a single name or not, this is the trick that we are doing. So there is no sector allocation, there is no country allocation, it's simply the look at a single company, decide upon do you want to own it for the long term, like minimum 3 to 5 years, or don't you want to own it? That's how we build the portfolio.
And can you name some companies where you see value in this moment?
I mean, if you look at the top 10 holdings within Europe Equity Growth Select, I mean, there are 2 companies standing out as being the top 2 positions, if you want. On the one side, you have British company Reckitt Benckiser, which is a consumer products company, so a consumer staple, and they are at the cusp to change their business model. I mean, probably all of you know Reckitt Benckiser from household products like Finish, like the dishwashing taps and all this stuff. And maybe you know also that they are active in some of the OTC pharma products like Mucinex or Nurofen. So they are moving more and more their portfolio from a hygiene and household company to a consumer health company, which means that the growth rates that you will see for this business are category-wise a little bit higher. The margins that you are making in this business are a little bit higher than compared to your former business. So this is a long-term journey that Reckitt Benckiser is on that should also be reflected in a nice share price appreciation over the long term. Another company to name is Danish company Novo Nordisk. I mean, there's been a lot of chat about this name over the past couple of years. They are the market leader when it comes to insulin products to fight diabetes 2. They've now just launched a product called Saxenda in the US market to fight obesity, so the root of the problem of diabetes, if you want. So we do see the pipeline of new products coming from Novo Nordisk over the next years as quite interesting and profitable, and we do see a lot of growth and cash flow growth in this name going forward.
Thank you.